Hi and hello, my name is Paul and I am a user of the DGR indicator. I'm not one of the founders, not one of the smart brains behind it. Actually, I'm just a pretty new user to it. I'm using it since last year, the end of last year, but since then more or less frequently. And the guys who are behind that brilliant indicator asked me if maybe I want to give some of my experience to you, because sometimes it's also helpful to see into the charts of new users instead of old experts. So today I just give you a small explanation of the DGR indicator and how I use it at this moment, and I will show you one or two examples how I used it in the last days. So what you are seeing here is the 15-minute time frame of the alpha coin. So you can use the DGR for all altcoins as well, not just for the Bitcoin. And the DGR is coming in, let me just switch off this. The DGR is coming in two portions. One is called DGR 2.0 and the other one is called DGR Assist. That's just because the DGR now already has so many different functions that it's just too much to put all this information into one indicator. So the guys made like two different indicators. In this one you will more or less find the main part, and in that one you will find the extra parts, you can say. And like you see, I just switched on really a few of all the informations available. Also on that one, you see I just switched on a very few informations. There's much more to see and to use, but with this little choice I took, it's more or less enough for me to be profitable. To shortly explain you the most important things you can see here, so for sure the white line is the course of the price line of the alpha coin, running in 15 minutes candles. And now we have the most important parts I took out from the DGR. The most important one is this green line. This is actually the DGR step line. So every time you see that this line is like going kind of in a wave form, and every time when the price is above this DGR line, the price is heading up. So here you can see it head up from here until here and then up to there. So more or less from here to there before it really broke it. And then when you see it's breaking this line, it's going down. So every time when it's beneath this line, the price is more heading down. So in this case, from here to there. Then you see here it's breaking it again to the upside, so the price is going up. So the DGR actually gives you a very nice view of if the momentum of this coin is more bearish or bullish. So when it's down, it can also just go sideways. You see from here to there, it's not really going down so much, just like 1.5%. So when it's down, sometimes it's also just going sideways, but when it's up, normally it's really going for some meters. So for here, for there, it's like 8%, for example. Here you see it's not every time 100%. So here you see also the DGR line is losing a little bit of pace. It's going more flat. This is something we are not searching for. So when you see the DGR line is going more in a flat curve than really going this nice waves, just search for another coin at this moment. We are really searching for moments when the DGR is going this nice waveforms. The two other lines which are very important are the orange line. This one is the line where the buyers are waiting that the sorry, I made it wrong. Just let's change it. This is the seller's line for sure, and this is the buyer's line. Yeah, now it's right. So every time when the price hits this line, there's really a high selling pressure. The same when the price is hitting this line, there is a high buying pressure. And in the middle of this two, so not exactly in the middle, but you can say in the middle of this two is the blue line. We call it the 50-50 line. So every time when the price is hitting to this blue line, the chances that people are buying or selling is more or less like 50-50. So you have this buyer line, this seller line, and the blue 50-50 line. Then you have the red one, which is the beer trend. So and every time when you see here, when the price is going up here, here, and it's breaking this red line, we are out of this beer momentum, this beer trend. You see it's flipping from red to green. So now we are here in a bull trend. You see again the price is coming down, it's breaking this bullish trend. So we see here an indicator, now we are again more in a bull phase. You exactly see, yeah, the price will go down. So this red line and this green line just exist, it's just existing one or the other in the same time. You see from here to there, from here to there, we had a bull phase, the price went up. From here to there, we had a beer phase and the price went down. And the last one, which I took for my strategy, is the fit boxes. So this is from the Fibonacci. These are the Fibonacci boxes, the Fibonacci levels. You can go for the DGR assist and say if you want this in a daily time frame or in whatever hourly or minute time frames you want to see this Fibonacci lines, this Fibonacci boxes, you can switch this over here. I like to have the daily Fibonaccis because they are really solid resistance or solid supports. So I just work with the daily Fibonacci boxes. With that said, this is more or less my toolbox, which I use to look into the price and to look into the momentum. The DGR for sure is not something which is just giving an exact signal to buy or to sell. For sure, it's more for advanced traders who can read price action and who know how to work with indicators. But if you have a little bit experience, it's really a beautiful tool to see the momentum switching and to buy in the right moment. So I will give you an example in this and at this coin where I used it. So exactly here, you see here the DGR is coming down hard. Before, like I said, between here and there, it's more or less just small waves, so I would never go into any kind of trade when it's so flat like it's here. You see what happened here is the price went down to the buyer. Was people started to buy, but then here it broke the buyer line. So this is like a weak, the first weak sign. Could hold a little bit, it tried it again, and here it broke it again. So at this point we had to like really go up, but it couldn't go up, it couldn't even pass the 50-50. So there was really like a big correction coming in now. Maybe other people would somewhere go in here, but it's just not my strategy. So I wouldn't do anything over here. No, I am waiting for moments where the price is really crossing this DGR line, like here. It's crossing the DGR, so I know, okay, now maybe the momentum in the market will change and we will go in an up phase. But normally prices are coming back, so I'm not going in here. So I'm waiting until it comes to a line where I get some confirmation. And my confirmation is this one. Why? Because here was this new buyer line of the 15-minute time frame was built here, and it was already confirmed once over here. So I saw, okay, people who bought here also bought some hours later here. So when it came back here, with knowing we crossed the DGR, I took the risk and put a small portion, a small position, and also a very low leverage, because it's not our perfect setup. A perfect setup would be if the price in this move already broke the bearish trend, but still it couldn't it didn't went up so far. So there's still like a chance that the bearish trend would continue and go down. So here I wouldn't go into a big position until before I see, yeah, the bullish momentum is gaining power. We broke this bearish border, and then I would go in here with a bigger position and also with a bigger leverage. But I decided to go in here with a small position, and like you can see, it confirmed this trend line which was built here, confirmed here. It accepted this line, so my position was good and the price went up. Here at this point I was very happy because now we are in a bull trend, so I was very sure now the momentum will change. It came back to the 50-50 line, and now you can see at this 50-50 line the momentum also changed, because before you can see every time when we crossed the 50-50 line it was kind of unsure if people buy or not. You see it's going up and down around this 50-50 line, but here it's like perfectly confirmed. Yes, this 50-50 line now is also a buyer point. So what I did is, when it came back the next time to this 50-50 line, I increased my leverage and increased my position at this point, and then again at this point. So now I really had a big position opened with a price somewhere here, because it's like a mixture from that one plus this and this, so my price was somewhere here. And like you can see, my decision was good. I read this indicator in the right way, and the price really went up. I took my first profits at this point, because this is the 15 minutes line for the sellers. So the first sellers in this time frame are waiting at this point. So every time I'm at this point, I take out like 20% maybe of my position, just to be sure that if the price comes back now, at least I get something out of that. But it broke it heavily, went up. And what you see here now is not from the DGR, it's a line I did by myself. You see I marked it with 1 hour. I will just switch for the 1 hour time frame, and you will see this 1 hour line is from the 1 hour seller. So this, now we are in the 1 hour time frame. This line is exactly the same like before, just that it's made by the 1 hour time frame sellers. And what I'm doing is I just draw me a line for this 1 hour. So I take it here. I don't know how I did it actually at this moment anymore, but somehow I took this point, I took maybe this point, I don't know. I just draw it, and then I go back to my 15 minutes. And now I have it in here, so I see, okay, at this point is the seller line in the 1 hour time frame. Knowing that, I took my profits over here. And I took another profit just short after, because this is my daily box, so my daily Fibonacci box. So I decided to take profits here. Price went down, okay, it went up again. I took another profits over here because now we are inside of the box. So at this point my position was closed about 60-65% already. the price now went down. It's crossing the DGR. So at this point, at the latest, you are really have to pay attention, because now it can go down very fast. But what happened is the price accepted our green uptrend line. You see it perfectly bounced on this green uptrend line. So I wasn't exiting. I didn't took the exit of my position, so I stayed in. But what happened? It came again to the 1 hour seller's line and to our new 15-minute seller's line, which are in this moment more or less the same. So when we came here again, so we came here first, I did nothing. We came here a second time, hit it 1, 2, 3 times in a row, and was sure, okay, now we can't pass this price anymore, because we have like 3 rejection points here. We have the 15-minute seller line, we have the 1 hour seller line, we have the box from the daily Fibonacci, and also we are beneath the DGR. So this is like maybe the last chance to come out of this trade with a lot of gain, with a lot of equity. So I took out more or less now everything which was left of my position. Then in situations like this, I let maybe like 10% open, all the rest is out at this point. And when we crossed our bullish trend, you see here we crossed it. Now we went to a bearish trend. I was waiting if he is bumping up again, but he didn't. He went down. So here I took the exit out of this trade. So this is an example. I wanted to show you how you can use the DGR. You can use it in many other ways, because there are so many other indicators. But this is for beginners like I am, a very easy way, a very easy to read way, where you can make nearly no mistakes, because you are not just having at this point you don't have just one indicator. You have the 15-minute line with this 1, 2, 3rd confirmation. You are above the DGR, which also is like a support just right beneath the price, and I had my box down here. So when I went in here, actually I took a stop loss just exactly at this line. So I had a very low risk. From here, where I went into my stop loss, it were like 6 or 7% with a small position and a small leverage. But then you see taking profits at 12%, 12%. Ah, no, sorry, I wasn't taking profits here. I was building up my positions, sorry. So let's see, from here was then my average position somewhere there. I took profits at 20%, at 43%, at 47%, 46%, and then I closed my position around 26%. So you see, this is really a very profitable way to trade with a minimum of risk in the first position. In the next video, I will give you just some more examples like this one, how I used to trade with this easy strategy. I hope you could learn something, and just let me know if you understood it. I hope my English was good enough, and there are no questions open. If there are questions open, just hit me. Thanks.